Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISC FX Options Weekly Outlook for January 16th, 2012. As always, this is Jason Ayres of OptionSource.net. Let's start off with a look at a weekly chart of the US dollar index. This is a great way to gain perspective as to how the US dollar has been trading against a basket of currencies. While the US dollar continues to trend higher against most of the majors, the 80-81 focal zone remains a key support. A break below 80 will open the window for a retracement lower. However, as long as this level holds as support, we are open to a continuation higher with the 82-83 focal zone as the next target. Let's take a quick look at the daily chart. This daily chart reflects the uptrend that is in place and this 82 level sitting there as the next upside focal zone. Next up, the US dollar versus the Canadian dollar is seen here in the ISC FX Options pair value CDD. Well, the CDD appears to be creating a sideways triangle reflecting the uncertainty that has been surrounding the currency markets. Now, the 101-102 focal zone remains our key support here with the 103-104 level as the next upside resistance. Let's take a look at the YUK, the US dollar versus the Japanese yen. Well, the YUK spent last week consolidating within the 76.5-77 focal zone. A break below 76.5 opens the window for a continuation lower. A break above 77 opens the window for a retest of the 78 resistance. Let's take a look at the EUI, the US dollar versus the euro. Well, the EUI continues to respect the uptrend. The 78 level now assumes the role of support with the next upside target sitting at the 80-81 focal zone. Next up, the BPX, the US dollar versus the British pound. Well, the BPX broke above 65. The 64.5-65 level now assumes the role of support. A break below 64.5 is likely to signal a retest of 63.5. As long as 64.5-65 holds as support, we are expecting a continuation higher. Let's take a look at the AUX, the US dollar versus the Australian dollar. Well, the 96.97 level continues to hold as support. A break below 96 will signal a continuation lower. A break above 98 is likely to signal a move towards 100. Let's take a look at a few of our key points. First of all, the US dollar continues to trend higher. As with last week, we suspect this to continue as the fate of the euro remains uncertain. However, we are cautious of a pullback down to test support at 80. The CDD pushed towards 103 but pulled back at the end of last week. We are still looking for a test of the 103-104 resistance level. The YUK continues to test support at 76.5-77. The pair appears indecisive, and we will watch for a break below 76.5 support to signal a move lower. The EUI continues to trend strongly to the upside. 78 becomes the new support this week, and a break below opens the window for a retracement lower. The BPX broke and held above 65, opening the window for a continuation higher. The AUX retested support at 96 and bounced once again. Although the pair closed off of the highs on Friday, a break above 98 opens the window for a test of the 99-100 resistance this week. And this has been your ISC FX Options Weekly Outlook for January 16th, 2012. As always, this is Jason Ayres of OptionSource.net reminding you to sign up for your free webinar at www.optionsource.net. Thanks for joining me this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISC FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.